So lately, I've been getting a lot of questions that sound something like, wow, these HOA fees are really high. Or, what am I actually paying for in these fees? So today, I want to break down for you what you can expect when it relates to either an HOA, a POA, what those fees are, what's going to be included, and how to analyze if it makes sense. Because in the high country, it's really about security, sustainability, and convenience. And to be clear, so this video is not are we pro HOA or not HOA? This video, you're leaning towards buying a property that's going to be part of an association of some capacity, and you just want to better understand, how do I evaluate, are there risks, and what's included? That's the spirit of today's video. So I want to talk about why HOA fees can feel different in the mountains. And, we serve, as you know, Southwest Florida and the high country of North Carolina. Unlike the HOAs that you might have here or in other parts of the Carolinas, we're not just mowing grass, trimming hedges, and running a pool in the high country. There are real demands that have to be accounted for as it relates to living at altitude and the exposure that creates specifically with weather. So before I dive in, I want to talk about one thing that maybe just will help from a clarification. You'll often see the word POA or HOA used interchangeably. While they're similar, they are slightly different. A POA is a property owners association, while an HOA is a homeowners association. We'll have a conversation regardless of what you're looking at, because in many cases, what you'll see is fees get stacked. So as an example, if you buy into a gated community, there's likely going to be a master association, and that could include some fees that cover the common areas, if it's in fact gated, the gate and access control. But then if you buy into it and they have single family homes and they have townhomes and condos and a variety, they might even have multiple neighborhoods within that are all single family homes. Typically, each of those sub community types also has its own association. So let's say you buy a townhome in one of these communities, you're likely going to have a homeowners association and the townhome association, which could be a POA, just depends on how they have it structured. So anyways, you could have some fees that actually do stack. Now, as it relates to being in the high country and some of these fees and what do they cover, the weather is extreme. And to give you an idea, one of the first properties that we purchased up in the high country, I remember the first night we stayed, our bedroom was a back corner unit. And I mean, it sounded like the wind was just howling, and it was ripping. We're at the top of the mountain, the winds were just blasting. But it sounded like we were actually in a wind tunnel, to the point where I actually thought about, well, maybe I should put impact glass, not because of needing hurricane protections, but because it really does lessen the amount of sound that comes through. You have to be prepared. There's a lot of wind, there's a lot of snow at times, depending on where you are in the high country. And as it relates to that, these houses need more maintenance. That same development that we were a part of, in the very first year I was there was one pretty strong windstorm. And no, this was not Helene. This was the year, actually 2 years before that. Literally almost every downspout and soffit was blown out of these buildings. So the association had to then go through and do they are emergency repairs, but unscheduled repairs, let's just say, where they had to reconnect downspouts actually up. They had to replace most of the soffit and things like drainage. There's a lot of frost heaving with the freeze and thaw cycles. So you actually have things like parking lot maintenance. Again, this isn't like your typical condo that you might have in Florida or somewhere else. There's just going to be costs that have to be expected and budgeted for, which we can dive into as we start to look at budgets. So what's typically included? And I would say in these luxury type communities, whether you're looking at condos or townhomes, let's start with the outside. Traditionally, you're going to see most of your exterior maintenance is going to be included in the fees. That's likely going to include roofs, although if I could draw an asterisk, I would add one here. We're seeing some change to that. Your exterior maintenance with respect to painting, if it needs to be power washed, the decks that need to be stained, etc. And then access, so snow mitigation, certainly, in season, that's going to be a component that would likely be part of the HOA, but even that can vary. It might be to your parking lot, as an example, not necessarily all the way to your front door, depending on the type of unit you have. So even within an understanding what is included, there can be levels to that. So continuing on, and not really just exterior, but beyond the building itself, many of these communities are going to have private roads that have to be maintained. You've got lighting, you could have irrigation, you could have drainage that they have to manage. Of course, the common areas are going to require, for a good part of the year, maintenance, lawn mowing services, flowers, shrubs, all that stuff has to be maintained. That's typically going to be part of your association. So then you're going to have the operational portion of your HOA fees, and that's going to cover probably a property management company to actually oversee and manage the property. You're going to have insurance, which could be part of that. You're also going to have legal and financial obligations that the board and the HOA are responsible for. You're going to have reserve funds and studies that correlate to that, which we'll talk about again because it's a big deal and a lot of change which we're seeing within the HOAs and POAs. So this was the point in the video where I was going to transition to what fees are not included. But before we dive into that, I did want to talk about the change that we're seeing as it relates to reserve funds. So we call Florida home, we split time in the high country, and we are seeing a massive shift as it relates to HOAs and what's included in really the entire state of Florida. And this is largely driven from, if you recall, I think it was probably 4 years ago already, Surfside, which was a condominium complex over on the southeast corner of Florida, actually collapsed. It was really tragic, horrible. Lots of people lost their lives. I mean, it was just an awful experience. And ultimately, it was determined that the building was kind of in disrepair. There was a lot of deferred maintenance items that really shouldn't have been deferred. And it's something that we see in a lot of these associations where they pride themselves on having the lowest fees. Well, in the state of Florida, legislation was passed where you have to do what they call a SIR study, which is a structural integrity, reserve study. And there's milestone reports based on age, the number of stories, the proximity to the ocean because of the salt and the air. And ultimately, the whole goal is to identify what is the integrity of the building, and then what are those areas that are basically in your common elements that need to have reserve allowance so that they can be maintained properly. So basically, the study is required now, the engineering study, and then the appropriate amount of reserves is required. So what's happening is, while this has started and become law in Florida, well, guess what? It's been taken note, as you can imagine, whether it be a lender. If you're going to use someone else's money to buy into one of these buildings, they're going to want to make sure that it actually has good integrity, that it's being maintained appropriately, but also insurance. The carriers are going to want to make sure to the same degree that these buildings are in the appropriate condition and are being maintained properly. So while this has started in Florida, we're seeing a massive ripple effect across all of the country, and we're seeing it in North Carolina. So as it relates to when we look at budgets, when we look at fees, I would just say if it's a really low fee, that might actually be a red flag. So while that's good from an operational and just a carrying expense perspective, it could actually be harmful long term. And as I shared, that first community that we bought into, I don't really want to share names, they're in a much better place now. They did defer a lot of maintenance items, and the buildings themselves had a lot of differences. They kind of built them over time in different stages. They weren't all the same. Some had garages, some had big deck spaces, some had neither of that. But a lot of those items as it related to the common elements, the stairs, the decks, the parking areas, had all been deferred, and it was hitting a point where action had to be taken. And ultimately, they had to do an assessment. Every owner had to kick in, a little bit of money. They've now raised the fees where part of that actually goes to a reserve fund. They've done a more complete and thorough, I would say comprehensive engineering study as well to look at the expected life of all these components. And then they allocate to it, based on when the repairs should be expected, how much should be in the reserve study. So a lot of that is occurring. So what you might see is an increase in fees for the near term, and I say near term years, while they're building up some of these reserve funds, and then you might see that stabilize back out and then kind of normalize based on what the operational needs actually are for the building or the complex that you're in. All right, so now we'll talk about what the fees traditionally don't include. And obviously anything inside is likely going to be your responsibility as an owner. Even windows generally are going to be the owner responsibility. Although they do go to the exterior, traditionally that's going to be something that the owner carries. I would not expect to have much or any of your utilities as part of HOA fees, although there are a lot of communities now that bundle, let's say like their media, where you're going to have a basic digital kind of cable plan, and then also your internet could be included in that. So that we see is pretty common. There are a handful of communities that do have some amenities if they have a shared well or a septic, as an example, that's kind of built into the community. Sometimes that's absorbed or has its own charge. But like electricity, rarely ever will you see that. If you have propane, you're likely never going to see that as part of your HOA fees. And while there is likely going to be some level of insurance on the property, it's not going to cover any of your personal belongings. So you're still going to have a supplemental policy, which will really cover your possessions and the things that you have inside. Any cosmetic upgrades that you want to make in a unit, likely, they're not going to be covered by HOA fees as well. And I'll just say this, I talked about it kind of briefly before, we're seeing a lot of change. One thing that we're starting to see, it's real common in Florida already, but it's even starting to happen in the high country. Roofs in shared units or shared buildings are becoming, in many cases, the responsibility of the owner. So that's the kind of thing we're going to want to know up front. And you're going to want to identify that even prior to due diligence if we can, before there's any money on the table. And I do want to talk about this because I think it's worth stressing. There is a red flag when you have really low fees. And I want to give an example. So before we bought into that first community, we actually were under contract in a different unit in a different community. And we were using financing, and we hit a point in the financing process where the lender was looking for certain information from the HOA. They were looking for the budget, the reserve study, probably those two things in particular. And the board was kind of going through some transition, and the communication came back and they're like, we're not in a position to provide this just yet. At which point I was surprised. The lender was kind of ready to move forward, but I had serious reservations. So my wife and I, we had a bunch of discussion about it. And ultimately, we weren't comfortable moving forward with that particular unit. And it looked like a lot of the maintenance had been deferred. When you walked through, you could see a lot of the staircases and different things. The paint was peeling. There was a lot of rust exposed in different parts. So ultimately, we decided to move on. But when you have really low fees as they relate to, or compare, is a better word, to other similar options, let's just say, it could be a red flag. You really want to dig in a little bit closer at that point. That's where we'll try to request and get access to the budgets. We'll look for specific line items like reserve funds, just to give us an idea of how well funded or how stable, how solvent, so to speak, that this community actually is. And as it relates to that, when you're looking through some of these units and you're walking the common areas and you're looking at just the overall condition of the property, if it appears that a lot of the maintenance items have been deferred, and then you line up the budget with it and you see that there's a pretty low reserve, you could probably safely expect that they're going to get there through assessments. So I would just warn you that it's likely you're going to see fees increase. We rarely ever see fees go down. But as a lot of these communities are starting to build up their reserve funds to better capture the deferred maintenance and plan for it as opposed to assess for it, you're going to see a little bit of a lift, I think you can expect, as it relates to the HOA fees. So the other thing that we look for is who is made up on the board. Is it all volunteer-led? Are there paid positions? How many of the positions actually are part of the management company that has a lot more experience with managing communities? So that's something that we look for. And I will just say this, it's not a matter of if, but when maintenance and deferred items actually come due in the high country. So, you're going to expect that you're going to have to plan for repairs. And which approach do you want? Do you want to have it as part of your fees where you build up knowing it's going to come due at some point, or do you wait for something to happen or hit a point where it just has to be completed and you don't have reserves and then they accomplish it by way of assessment? So those are kind of the two paths. I prefer the first because it's a lot easier to budget and plan for. So ultimately, how do we evaluate HOA fees? And when someone's asked me, is it worth it? I can't necessarily answer that. What are you getting for the fees? What are the conveniences? How many amenities are included? If you had to get your own insurance and snow removal, or as you start to add up the costs, you'll if it's worth it. But there are some things that I look for. So as I'm walking a property, I want to look through the lens of the buyer. I want to look at how much maintenance does it appear is needed? Does it look like a lot of it is being deferred? I'm going to want to be able to see the budget and see a reserve study. So there's an overlay and kind of a balance between what the fees are, what's included, and how operationally is the building or the complex being managed. And so I'll just say, fees aren't inherently a good thing or a bad thing. It's the transparency that really matters. And so I'll say this as well. If you're considering buying into a condo or a townhome or any type of master association, and this is something that's on your mind and you're questioning, let's have a conversation. I'm happy to talk through, and we can even pull examples of different units, different communities to start to compare fees, identify what's included, and then we can go from there. So if that sounds like something that can be helpful, reach out to me. My information is on the screen. I'm available all the time. I read every comment that comes in. Please like, subscribe to the channel, send this to anyone that might be in a similar situation, and I look forward to talking with you real soon.